Hey listeners, let's talk about revolutionizing your mining operation with Foreman. This isn't your average management tool. It's an all-in-one solution for reducing costs and significantly boosting your revenue. Foreman brings a cutting-edge dashboard to your fingertips, empowering you with automated energy strategies. This means not only curtailing around real-time prices, but also strategically enhancing your profit margins through demand response. It's about leveraging energy efficiency to its fullest potential. With Foreman, you get a system that scales with your business, inventory management for assets, infrastructure integration, and business intelligence. Foreman elevates the cash flow and production of your entire operation. To see how Foreman can redefine your mining operation standards, visit foreman.mn. With Foreman, you're not just managing a mining operation, you're setting a new standard in the industry.
Accelerated by Compass is the premier accelerator program for Bitcoin mining sites at any stage of development. Our managed services provide expert guidance in site procurement, construction, energy agreements, and mining operations. Compass helps clients meet timelines and expectations for operational excellence, from greenfield to retrofits and everything in between. Don't just mine, excel. Visit compassmining.io now to discover how Accelerated by Compass can power your success.
Are you a retail or institutional investor interested in Bitcoin mining companies? The Miner Mag brings you free data and analysis from all major NASDAQ-listed Bitcoin mining operations to know who stands out. Check out visualized metrics and data-dependent stories at theminermag.com. Hey, welcome back to the Mining Pod. On today's show, we're joined by Zhang, a familiar face on the Mining Pod. He's been on the show twice before, but today we're talking about his new project, Alkyamya, which enables people to capture the upside on the Blockspace market or transaction fees. So if you have tried to make a transaction on chain at any point, you've seen that there's been like really high fee volatility or maybe even really low fees, and you're wondering like how that works. This is a product that enables you to capture and trade that volatility. It's a pretty interesting concept, but like he explains in the show, it's a lot like utility markets for, say, electricity. And his project enables you to sort of hedge. So if you're a wallet or a miner or an exchange, you want to make sure that you can get your transaction on chain, not have to pay too much. Alkimiya might be a product that you use in the next few years. Thank you to Leo for joining the podcast. Also, thank you to CleanSpark, America's Bitcoin miner, and Foreman Mining, Master Your Mining for being the lead sponsors for the Mining Pod. We'll hear a little bit more about both these sponsors during the episode. Okay, let's get into it. Hey, welcome back to the Mining Pod. Today, we're joined by long-term guest, Zhang of Alkimiya. Leo, welcome back to the show. How you doing?
Good. Thanks for having me back.
Yeah, it's been not too long. Was it earlier this year we had you on? Or am I like completely mistaken on that?
I think it's actually been a couple of years.
Yeah, maybe it was tokenized hash rate. So it has been quite a while. I think we just talked so much offline that I was just remembering something else. But yeah, I'm excited for today's show because we're talking about your new product with Alkimiya and hash rate speculation in a way, or block space speculations, maybe the better way of putting it. So I'm going to leave it to you to explain what you're working on. But there's a lot of different implications for how miners can protect their downside for this, or other participants in the block space ecosystem, if you will, can use a product like this. And I'd say just before we dive into it for listeners, like this is a very novel solution out there. So like that's the huge interest. I think a lot of people who have invested in you guys and then who are using the product, there's nothing really like this out there that's allowing you to look at the transaction fee market and speculate on it a little bit. So I'll give it to you.
Thank you. I mean, we've been working on this for quite some time on this project. And initially when we started, it was much more mining oriented. I mean, before starting Alkimiya, I was heavily involved in mining myself. I was a miner, right? And I spent most of my time and energy looking at mining space and improving, efficiency of mining operations, improving the finances of mining operations. When I was deeply involved in the actual operations of myself, the one recurring theme at the time, and this was between 2017 to 2019, a recurring conversation every time we go out there to raise funds, right? And in 2017, 2019 is the amount of available funds that we're willing to provide to Bitcoin mining was very, very small at the time, comparing to today. There's no PPA backed finance. There's no ASIC backed loans. There's none of that. right? And at the time, there's most of these conversations where, oh, okay, the return looks interesting, but can you, really like guarantee a stable 5% return, right? Like, and it was not possible. It was there was simply no financial solutions that were able to mitigate that volatility. So that's when I started thinking about my financialization of hash power. That was one of my earliest articles on Anicha Research. I started
legendary research platform, by the way, for those listening. We'll link that in the show notes. It has been super helpful over the years. So keep going. Sorry to interrupt.
No, it's when I started to think about what goes in and out of these things in a more systematic way, right? And what are the costs and how they're likely going to evolve. I was thinking about that in my industry from both my own point of view as well as what are changing at the moment. There's a lot of shift, right? Machine upgrades. A lot of machines were moving from China to US, and the profile of the players went from your traditional Bitcoin whales, people who were in crypto because they were interested in crypto, to more traditional energy, like something closer to that world instead. Well, things were definitely changing. And in 2020 and 2021, when I started thinking about the problem more seriously, the angle was to help miners hedge against the hash power. So the contract will be denominating in petahash or terahash at the time. It's a different world. Right?
Yeah.
Yeah. And at the time, it managed to get some initial success among the because for miners this is a very clear thing. Miners are able to use this instrument to partially hedge out their production risk, right? And they know exactly how much they're producing. They know exactly how much they can secure at the beginning of the month or beginning of the 3 month. So we had some initial success with that version, and also at the time there was a lot of hash rate tokens. I think Binance had one. Pooling was running one of the projects. Quite a few of those, right? And frankly, those are sort of continuation of cloud mining platforms, cloud mining protocols, which now has completely died as a business.
It's still around. It's like just basically taking the form of like it's a large entity like a BitFuFu or a Bitmain, and they just do private side contracts with like institutions. So like there's not really retail cloud mining, I'd say. And then on top of it, they kind of add this veneer of, hey, you actually do get your own ASIC and here's the serial number. But in reality, it's not that. So it's still around just a little bit. It's not in the way that like back in the good old days with like hash rate tokens and things like that.
Yeah, I think that world is pretty over.
Yeah.
This kind of institutional type of cloud mining contracts, right? They're much closer to. I mean, in essence, they're pretty similar to one mining pool, white label, and other mining pool. It's in essence it's the same. Like the block template construction has completely been outsourced to the root pool, I guess, root provider. So, anyways, that's a different topic, but. The original version of Alkymiya, actually there are some two versions of Alkymiya were trying to solve this mining economics problems. And what we realized was that it's popular for some miners, but it's very, very difficult to communicate what this thing is about outside this world, right? Like and the number of players who care about this is getting smaller and smaller and smaller. And so the number one thing with a good marketplace is that it needs to continuously attract new players, right? It needs to grow. It needs to deepen, and this is this market that whose open interest keeps shrinking. I think it still serves a pretty useful purpose for very heavy, highly industrialized operations to use financial instruments to protect their costs. But I think mining industry today, they're more interested in playing with traditional financial instruments like equity capital markets or debt capital markets compared to something that's more Bitcoin native or crypto native. but during this exploration, we realized that, okay, people are really interested in fees, right? The fee component of the mining revenue is what really excites people, especially after the most recent halving. Now that fees has become a greater portion of the mining revenue. I mean, still not significantly in terms of percentage. It changes, right? It ranges from 0.3% to 300% of the block reward.
Yeah.
So, but the volatility is definitely something that people are paying attention to, right? You have these new generation of mining pools, or new generation people who are running these mining pools. They're thinking more deeply about, okay, how do we capture fees? How do we develop these new tools to capture more fees? I think this trend is firmly established, and there's just no way of going back to pre-fee volatility days. And plus, Ordino's runes, the result is that, and a variety of Bitcoin L2s that are trying to make it into a thing. The result of that is, okay, for average consumers of Blockspace, by average consumer, I'm talking about people who are just trying to make a simple transactions, or people who are trying to mint a collection, people who are trying to like service providers, like wallets, traders who are trying to settle trades. Right? They have to settle certain trades regardless of how high the fee is, and they're just doing their thing, and all of a sudden someone on the opposite side of the globe decides to snipe this really ugly looking JPEG, and that sends the entire network to congestion. Or OKX, they up their script in their UTXO consolidation bots, and the bots start bidding against each other, and that sends the transaction fee to was it 300 that day, right?
Yeah,
something like that.
That day.
Yeah, so network congestion is not really a new problem to Bitcoin. We have gone through this many times, scaling problems many times. And each time our scaling is very slow. And scaling, it takes deliberation, and scaling requires a lot of time and efforts and investments to make it happen. Every time it happens, of course, we experience a more, I guess, abundance, right, of more efficient production of block space. But the pricing of these resources, right, full node resources, that's inherently a market-oriented problem, because it has a relatively fixed schedule, but demand is ephemeral. It changes very quickly. It can be, people are just willing to pay, 6 sats, and all of a sudden, it's people are going crazy over and RBFing each other on this stupid thing, and it sends the entire network to nuclear. So I think this volatility itself is what's going to be really painful for commerces that are trying to build their businesses on chain. By commerce building business on chain, I'm talking about service providers, right? Exchanges, they're the most typical ones. Wallet service providers, something like River, who that promises that you get one free withdrawal every month, something like that.
Yeah.
So these services, they're trying to offer good experiences to their users, and they inevitably have to become sort of the victim of this volatility. And that eats into their marketing budget, or if they pass that cost entirely to their users, that hurt their users. I think an analogy is that it's kind of like, Blockspace, right? Really, it's the full node resources, the compute, the storage bandwidth, all these, the right to access that resource is the equivalent of electricity. Right? It's the electricity that powers the public blockchain. And today, every time you try to make a transfer, it's like you turn on your AC, you turn on the light bulb, and the amount of electricity you're paying for that action is a global, connected grid, and you're paying your cost of turning on the light switch jumps from 2 cents to $200 because someone else decided to turn on a lot of fucking light bulbs on the other side of the world, like simultaneously. And all of a sudden you can't turn on your AC anymore because, and so I think this is the state of crypto, or this is the state of using public blockchain today.
Yeah.
For energies market, for commodities market, there's centuries of developing futures markets where utility companies like Con Edison of the world, they're able to use these futures contracts to hedge, to lock in their average electricity price for a month, 3 months ahead of time, such that they're able to pass on the stable electricity contract to residential areas, to large industrial players. These markets have been around for many, many years, or actually like more than that. So if the thesis is that more business activities, more predictable commercial activities were to take place on chain, these business would want to use this type of instruments to protect against the volatility of the fees.
Love it. So it's a way to speculate on Blockspace, but it has an end utility where it's going to enable people to have more control over when they're going to get insertion for transactions, which protects their bottom line. For me, like the natural users, you already mentioned a few exchanges, when they have to do maybe like a batch payout, we see that like Coinbase or Binance will do this every once in a while on chain, where they're like reshuffling hot wallets and moving tokens around. They typically try to time it at a good point, but sometimes they don't. So there's been multiple instances where Binance has done it at a bad time. They haven't done it well, and fees shoot up quite a lot. Something like this would enable them to like protect their downside. And then for a wallet or another service provider who is acting out there, if they are purchasing contracts on this platform, they'd be able to protect their downside as well in the instance where that occurs, right? So there's all those sort of like service providers there.
In the competitive world of Bitcoin mining, one name stands out: CleanSpark, America's Bitcoin miner. At CleanSpark, efficiency isn't just a goal, it's our standard. Our sophisticated facilities are built and led by expert teams who care about Bitcoin and the communities we work in. Scale, we've mastered it. Our large-scale operations have set us apart in the industry as examples of community-oriented building. Our track record speaks for itself. We navigate the complexities of the new economy with precision and with skill, continuously achieving operational milestones. Curious about how we do it? We invite you to discover the story behind CleanSpark's success at cleanspark.com.
For miners, how would they ever be interested in purchasing a contract in this? You did mention at the beginning that like you started moving a little bit away from that for miners specifically for this product, even though it is obviously like a product that is all about mining in the sense that you're protecting against transaction fee volatility.
Yeah. So for miners, this would be a very, very different use case, right? Going back to electricity futures market analogy, the people who are selling these contracts, the utility companies, they're buying these from producers of electricity. This is actually really, really similar to electricity market in the sense that you can't really store it. You can't like Blockspace. It doesn't. There's no battery. There's no such thing. So miners are the natural, I guess, producers, right, of transaction fees, right? They don't really produce transaction fee in the sense that like they create it out of thin air, but they collect it. They receive it. They pay electricity. They pay for labor, machine maintenance, networking costs to collect the transaction fee, to materialize it. So we can loosely use the verb produce. But in this very case, right, miners, they are natural producers of transaction fees, and as transaction fees become a greater and greater percentage of their earnings or revenues, this becomes an indirect way for them to protect against potential downside. Mm-hmm. So if, let's say, so the miners, they can complain about Casey Rottmore all day, but they're in the same boat. I think the single greatest quote that came from Blockspace Media is that miners are ordinary investors. miners are ordinary investors, whether you like it or not,
Yeah.
right? And you should 100% should. Like, there's no reason why a miner would dislike these things. And in fact, miners and mining correlations should encourage these things to happen. They should like invest in these things. They should like try to build out tools to help people use these things better. I mean, the rationale is that when generating more of these activities, aside from generating more fees, more revenues, more security budget, there's also more brain shares from the newer generation to build more actually interesting tools, right? Like you can like it takes time, it takes process. Like you can't just look at these stupid monkey JPEGs today and think, this is what Bitcoin's always going to be, or this is what Bitcoin's about now. It doesn't stop there. It doesn't stop. It compounds, and especially if you want to like attract the brilliant high schoolers who are looking at these things, you can't just tell them to work on Ocean Protocol or some stuff like that.
Just to like kind of keep with this train of thought, I think the ordinalist point here is interesting in the fact that like we're not always just going to have Bitcoin on chain, apparently. Like, I think a lot of people just want like UTXOs on chain. That's all we're trading. And perhaps there is a future world where like Bitcoin becomes so constrained in sort of its vision that that's only what's happening. And that's essentially what's happened over the last 10 years. But it does look like with possibly OP-Cat happening or L2s coming on chain, and even in the Lightning roadmap with some of the Taproot assets, we're going to see other assets on the Bitcoin network. And those other assets are going to have random moments where there's spikes in demands for them. So for example, let's take the idea of like a decentralized exchange built on top of Bitcoin, or even somehow plugged into Bitcoin, maybe it's on the ETH network. And there's like a momentary desire from like a lot of traders during a liquidity event to get a lot of stable coins. They want to swap in and out of Bitcoin for stable coins or vice versa based on this moment. I would say like something like Alkimiya would be really interesting then, because that momentary high volatility upwards for Blockspace demand immediately translates into transaction fees, which historically only miners have been able to gather, right? Like only if you plugged in to the Bitcoin network as a miner were you able to gain those transaction fees. And even then, sometimes you were not able to because the pool could collect these things if you were under a different payout scheme. For the most part, you'd be good, but depending on the pool sometimes. An instance of that, of course, would be the halving block where via BTC collected the Epic SAT and then sold it on an auction and collect the rewards for itself. So like these pools sort of sit in the most high prominence position. A DeFi product like this that's native to Bitcoin or works with the Bitcoin protocol allows anyone, or sort of decentralizes that or democratizes access to transaction fee volatility, which I think is a very cool part about this protocol. I'll let you run on that a little bit more if you want, but I'm also interested in moving over to like how this product works on the back end and what are some like future goals for it as well.
So as for getting exposure to transaction fee volatility or fee rate volatility, to be more specific, this is interesting because it's something that affects everyone, right? Every it doesn't matter if you're making a simple wallet transfer or you're trying to snipe, like creating these series of very complicated sniping actions, or you're running an exchange. It doesn't matter how the complexity of your operation, it affects all of us. And these things, the negative externalities that leaked onto average users is very real for hindering the next, I guess, billion of users getting onboarded, right? And also what it very clearly hinders is on-chain native transactions to take place, right? So the exposure of this, it doesn't really like take away transaction fee earning abilities away from the miners, because this is entirely synthetic. What people really need is just a financial exposure to that swing. So before that, previously people had very little recourse against these wild swings, right? They just have to I have to pay this fee now, or I have to wait for 3 months for a fee to go down. But now there is a tool for you to achieve what you want if you're able to use it appropriately.
Gotcha. Cool. Well, I think it's like super important for this sort of thing to be built out natively on chain. Let's talk about the the back end of it, like the engineering part of it. Like, what sort of components are you using? What would people be familiar with? This is more of a Bitcoin crowd. I understand this is built on ETH, so you might get some flack for that. But I think that's like a testament to like what we need some more optionality on how to build on Bitcoin. But I won't steal your thunder again. I'll hand it over to you.
So this is a typical DeFi architecture where there's an oracle that pulls so what we pull is the median set per VB of every single block. This is the increment of the index, and the index tracks the average of the median set per VB of every single block in that period where you have the exposure, and your payout will be settled against that average. And the creation of these contracts and the settlement of these contracts are facilitated by a system of smart contract, and this is on ETH because we don't have a choice, right? Like, show me a f***ing way if you want to. Like, on Bitcoin. Yeah. Anyways, I had this too many times, but so on that side, it's not like it's not anything that people have never seen before, but it's just like this type of market is definitely novel.
For the Bitcoin builder side of things, I'm interested in getting your opinion. Have you guys been courted by any of the L2 projects that are out there that are trying to get people to build applications on top of them? And what has been like your interest to date, if that has happened?
Yeah, we definitely got approached quite a few times. My response is always, like whenever you guys are ready. Whenever that.
Yeah, that's the thing. A lot of these projects are not decentralized, and so like ETH does become like a pretty good playground because most of the infrastructure is built out, things have been tested, so you can actually like run it with some integrity. As a Bitcoiner and as like a longtime Bitcoin miner, what are some aspirations you're seeing for maybe not only just the product, but like the building experience on top of Bitcoin? I mean, you mentioned a lot during this interview, like the on-chain economy and how like you want that to grow. And I'm totally with you with that. I want a lot of different projects to take off on top of Bitcoin natively, whether it be like stable coins or on-chain lending, things like that. Perhaps a little more constrained than other networks, but I'm certainly interested in it. So yeah, maybe for this product, what are some aspirations you'd like to see that you'd be able to do on top of Bitcoin? And then what are some other things you're interested to be built on top of Bitcoin?
Just to go back to an earlier point, miners are ordinary investors. Miners are inherently invested in growing on-chain economy. They're growing more on-chain activities, right? So I think the previous generation of miners who are just sitting comfortably, they just need to turn on their machines and clean the dust off the fans. That I think that crowd is about to get dusted like soon. Mm-hmm. It's just simply because the competition is increasing and the revenue per share, right? Per share means like per petahash is decreasing, and the volatility of that is also increasing, and the ability to capture that volatile fees is also changing very fast, right? Like you can complain about Marathon all you want, but they're doing something like pretty cool there. So I think these are trends that are firmly established, and I think turning a blind eye towards these trends, it only just means that this market you're no longer relevant to this market. I think it's possible that there's one version of the world where Bitcoin just doesn't move, right? It doesn't move. And people are comfortable. Oh yeah, this is digital gold. All right, it's ossification is good. So there will be a crowd that justify that. But as a result, most of the Bitcoin trading activities will be in BlackRock ETFs. And is that a version that we're want, right? Like, okay, I mean, it's not. I'm not asking this from like ideology perspective, but it's really just about who gets to create most interesting use cases from this precious thing that Satoshi Nakamoto created, right? This thing that still has so much potential energy that gets waiting to be unleashed now is just locked in ETFs, right? So if that's the version of the world that we're okay with, then fine, fuck it, right? Like people are just gonna go build on Solana, right? It is just, and nobody will care about this anymore, except for, I don't know, like people who trade ETFs.
Yeah.
Yeah.
Just to add one more thought to that really quick. I've talked with Matt Williams over at Luxor. I know you know him. He's been working the hash rate products as well, which are slightly different than this. And the thing that he always says that's kind of stood out to me is like typically a lot of miners, when they've been trying to protect their downside risk, have ventured more towards like CME options for Bitcoin, right? Where you're like hedging your hash rate with Bitcoin. And for this sort of product, I like the fact that like you are tying the native asset of Bitcoin to a native project for crypto. I know it's built on ETH, but like a project centered around Bitcoin. And so to your point about like, do we want the BlackRocks of the world or these other large TradFi institutions to come in and start building like the different financial instruments? No, I think we'd rather prefer it to be like native to the industry, right? Where we can like tailor what this looks like specifically on chain and tie like your Bitcoin revenue, which is an on-chain asset, to a financial instrument that's also built on chain. So just like thought I'd throw that in there as an idea. I kind of like how this like works together in that same vein. Yeah, I'll let you respond to that if you have any thoughts, but I'm curious about continuing with the train of thought about like how you see Bitcoin building going from here.
I think this is more of a cultural turning point than technological for Bitcoin. I think the possibility is there, the toolings are there, and it's really just, okay, can we rally enough of new people to work on this with the opportunity, because the opportunity cost is very high for good devs. For solid protocol designers, the opportunity cost is really high, right? Like that's not something that would really have taken into considerations when we pitch this. So what would make it interesting to attract these people to work on it, to like, they have to move mountains in order to make some, simple like interactions work, where on a lot of other ecosystems, the toolings have become much more complete and the brain shares are much more accumulated for a while. I think it is what fundamentally makes Bitcoin better, right? It is the fact that nobody gets to like change its emission schedule. Nobody gets to come in there, introduce some equivalent EIP 1559. Nobody can come in there and make it turn into a proof of stake network overnight. I think these qualities are what makes the potential energy that's locked into Bitcoin very like stronger than anything that's out there. Yeah. And of course, with TradFi, this is the most comfortable thing that they're able to introduce to their crowd, and they seek control, right? So I think it's really, if we, by we, I mean people who are interested in creating more use cases out of Bitcoin, creating more fun way to play with Bitcoin, and I think there's some early signs from Bitcoin season 2. I think still very early, so we'll have to see.
Need ASIC help? Check out Vitamine, one of Bitmain's certified repair shops located in Washington State with satellite offices in Colorado, Oklahoma, and Texas. PSUs, hashboards, immersion setups, in and out of warranty repair, Vitamine has you covered. Want to train your technicians? Bring Vitamine to your site for hands-on training in the art of ASIC repair, complete with Bitmain AMTC certification. Contact Vitamine today at dan@vmasic.com. Again, that's dan@vmasic.com. When you think of ASIC repair, think Vitamine.
There's a lot of early interest in the Bitcoin season 2 crowd. And maybe that's like the last place we can kind of move the conversation before we definitely want to touch on like where people can like go explore and test with Alkimiya. But the Bitcoin season 2 crowd is growing. There's a lot of different products that are coming to market, whether they be just like multi-sigs with some sort of odd confederation behind them that aren't really a protocol yet, all the way up to like more thought out restaking protocols on top of Bitcoin, something like a Babylon chain that are garnering a lot of VC interest. As someone who's one, an OG Bitcoin miner, and 2, also someone who builds on chain, what is your feel for the general Bitcoin season 2 narrative at the moment?
I think it's still a little early to judge if this is going to be a sustainable trend or not. I think there are a lot of incentivized So I think there are a lot of whales who woke up and start moving their dormant capital to try to juice more APYs right out of it. I think a lot of the early movements of these Bitcoin Season 2 products are projects that really fit into that profile. I think the rally cry to get more people to build more interesting applications, it has to happen on ordinals and marines, because this is what Degen's interest. This is not Degen's, but this is what's most accessible, right? Otherwise, you're just building another like centralized custodian trading platform that's no different from what's already exist. And there's nothing wrong with that if that's your choice. But it's just it doesn't introduce new technology, right? It doesn't introduce new solutions that people can build upon. It's not composable with other. It doesn't help the new people who try to build more interesting things. So as for Bitcoin L2s, I think most people are waking up to. I don't think there's ever the illusion of like what the early Bitcoin L2 projects are about. I think everyone saw them as what they are. Or were, if they're still, in case they're undead. I think there are some projects that are truly trying to make it happen. I don't think this is entirely a technical challenge. I don't think it's a competition of like, oh, whose federated multisigs or have more nodes than like. I don't think it's that. It's that okay? Can you really build a culture? Can you really create that culture of ecosystem right on your ecosystem? Can you really attract your version of Uniswap? Can you try your version of a lending protocol that's only available on your thing and people want to actually use it? And the way to approach that is not just to go to Uniswap Foundation and try to pitch them, hey, I will give you, like 10% of our entire token, and come fork your version of Uniswap on top of our EVM compatible L2. And that's just it's attract mercenary capital, right? Like it's not sustainable. So what is something that's native to this? What is some experience that you could create on your version of Bitcoin L2 that's not, you can't find on anything anywhere else? Because people who it's not people are not waiting. People in Bitcoin are not waiting for EVM compatible chains to save them. Bitcoiners who wanted to use EVMs, they would have used it a long time ago. So, and Jesus Christ, and plus the experience of bridging to a Bitcoin L2 with these like 100 multi-sig federated multi-sigs is not easier comparing to just create to swap your BTC for a wrap BTC. It doesn't make a difference, and so that if the entire pitch is based on, okay, our federated multisig is slightly more decentralized compared to BitGo, it's not going to work. It's just inflating your token. And hell yeah, if you raise VC money, of course you're going to launch a token, and all of that is going to get inflated away by mercenary capitals to capture it. And we've seen that game like a billion times at this point. So if people who want to create Bitcoin native culture, I think I can't really describe like what it looks like yet, but I think it has to go back to moving UTXOs, right? It has to go back to move sats. Like Ordinals was Ordinals was different because it's based on sats, and I think that's not what make those things interesting in the first place, but that's what make it very unique compared to everything that's out there.
For miners, the thing that always scares them away, I think, is like getting involved in the Degen crowd. So I'd be curious, like, what's your pitch to miners, or maybe even like those more traditional wallets, like the Rivers out there who might have a use case for this? How do you sort of bring them into the fold and be like, hey, we have a product that meets your need? Is it that simple? Just that you can get them in on that sort of promise there? Or do you think you're going to have to do more legwork because of like the history of these Degen products that kind of show up and disappear?
I don't think so. Alkimiya is definitely not. It's not a Degen product. It's difficult for Degen to play. In fact, we would not use Degens because it's just not like, compared to meme coins, this is much harder to trade. It's much harder to think through, much harder to price. But for the equivalent of utility companies of this of I guess on-chain economy, the problem it solves is something that they experience, right? This is a pain point, and of course, I think there is quite a bit of legwork required to educate them on how to use it, and where the risks are, and how to properly enter, because it's a market after all. It's not free lunch. So I think that is the hurdle of any kind of like new marketplaces. But we've seen this interactions happen before. We've seen this in every market where this producer and consumer of a resource is not like, this is under all these abstractions of Blockspace, but blockchain mempool behind the scene is really, okay, you are paying for full node operators, compute, storage, bandwidth, capacity. Like, you're paying for these things. These things should be priced.
No, I like that you said that. I think that's actually the most attractive thing. I'm glad I asked that question. You then verged on the side of like maybe not being the right one. The fact that it's difficult to use, I think, can attract the right crowd. So let's finish up. Where can people find more about the product and start using it? My understanding is just a test version out yet. I don't know if the new version is fully launched yet, but I was playing around with it the other week, and very intuitive in terms of that. I don't think I'd be a good trader for it because I'm not a trader, but just like the platform, the UI UX standpoint, it was very intuitive.
Yeah, it's launching in 2 weeks.
Let's go. 2 weeks. Yeah. Okay, so I
And
think by the time this podcast is out, definitely we'll have, maybe like this will go out right before the product launches. So nice. We're timing it perfectly, Leo. That's great to hear. That's awesome. What are the website, where to follow you? And then of course you got to plug Anisha Research one more time as like the best blogs, and I'd say in Bitcoin and Bitcoin mining.
Yeah, the website is just alkimiya.io. Alkimiya is a difficult word to spell, so it's ALKIMIYA. Wait, did I spell that right? Yeah, I think so.
We'll put a link in the show notes. Yeah, whenever I'm looking for your info on chain or on Twitter or whatever, I always spell it incorrectly. So a little hard, but it's memorable. That's for sure. Cool. Well, awesome. Leo, thanks for joining the Mining Pod and kind of walking us through this. Definitely a different conversation than we've had for a lot of different projects out there. But I think that speaks to its novelty. So again, thanks for your time.
Thanks for having me.